Boeke Burke, Director and Lead Analyst, Sustainable Finance, and Beth Burks, Director, Sustainable Finance, both at S&P Global, discussed the company's recent report, Lost Water Challenges and Opportunities, which looks at the topic of non-revenue water, NRW, in terms of the problem it presents water supply companies across the globe, especially given increasing concerns around climate change and water scarcity. Better asset management appears to be the best approach to successfully addressing the challenge of lost water.
Okay, so S&P, you've recently published a report titled Lost Water Challenges and Opportunities, which deals with the issue of non-revenue water, NRW. And I guess the obvious place or good place to start would be if you can just give us a definition as to what non-revenue water is.
Absolutely, and that's usually where we have to start anytime talking about this piece. But non-revenue water is kind of an entire basket of issues in the water utility space. But fundamentally, it boils down to three different issues. The first one, and the smallest statistic within the statistic, is leakage. How much water is just leaking out of the pipes, leaking out of the faucets, so that it's not being delivered. The second category is kind of economic losses, underbilling. As meters get older, they turn more slowly, and it miscalculates how much water is being delivered, never in the utility's favor, as well as, essentially theft, illegal taps, things like that. The third category is essentially water that is for some policy decision being provided for free. It's not being billed for. And so there can be good economic reasons for this, say firefighting. There can also be other issues that, for some reason there have been additional subsidies or something so that the utility doesn't get compensated. In total, non-revenue water is when the utility treats this water, but for one reason or another, it never gets paid for providing that service.
Okay, so I was going to ask, is it fair to call it all wasted water? But it's not, in fact, because plenty of it does get to the customers, you say, but they're not paying for it either because they're allowed not to pay for it, or they might be stealing it. So
in some cases, it's not being provided. That would be your leakage cases. In some cases, yes, it is actually being provided. And so I think that's why we prefer the term lost water to wasted water. There can be a lot of different legitimate as well as illegitimate reasons, as well as infrastructure challenges, which are why the utility is not being compensated for this water.
Okay, and before we drill down a bit more into the report, do you have an idea as to those three types of non-revenue water, what sort of proportion? I'm sure it varies, from country, region to region, but as a general rule, do you have any idea as to which parts?
It really varies significantly, especially in terms of the amount of water that's being provided either for free or at such a significant discount that the utility is not being compensated in a way where it can make back its costs. But otherwise, I think that's one of the challenges is a lot of times utilities will report a smaller statistic like leakage, that is just the amount lost to leakage. Sometimes they'll report non-revenue water, which includes the whole bucket. Sometimes they report lost water, which is kind of the first two buckets out of the three that we've talked about. So it can be very difficult to compare what one utility is reporting to another. Never mind the regulatory definitions as well that can potentially also affect this. Sometimes they report volumes, sometimes they report a percentage. There's a whole host of statistics that deal with this issue, but we don't have consensus around, a statistic that we can use universally to really kind of be able to compare this issue from one place to another.
Okay, because I was going to then ask, non-revenue water, presumably the problem, you at least know if the problem is worse in some countries or regions of the world than others, and whether or not, therefore, how seriously, again, countries or regions address that, what you've identified as that problem. Just are you able to give any sort of flavor as to how it varies, the picture varies across the globe.
Yeah, so that was one of the central aims of this report. So we drew on a number of data sets. One that was from within S&P Global, which we collect on listed water utilities. And there we're collecting leakage rates. So that indicator that we talked about. And really in more than half of those water utilities that are listed, publicly listed, reported leakage rates of more than 20%. So that's quite significant, and that's sort of in sort of your biggest utilities around the world that are seeking equity investments. We also looked at non-revenue water rates from a study by Lean and Wyatt, and that compares non-revenue water at the national level. And there, more than 2/3 of those countries had rates of non-revenue water greater than 30%. So that's leakages plus the other types that we talked about. And in that data set, you tend to see that Australia and New Zealand are doing pretty well at this indicator. There's some areas of the globe where there's just no data, so they're having to model for it. So notably, that's sort of like Pacific Islands, which are particularly vulnerable to climate change, as we know. And really, so we're getting a bit of a picture, but it's not really a globally consistent picture. And the final kind of data set that we looked at was around US water utilities. So there are a huge number of these, as Erin knows. She sits on that side of the pond, as you can tell from the accent. And those there we rate over 1,600 US public water utilities. So there's a huge number in that data set in that part of the world. So we were able to really see that group of water utilities seem to have the best rates overall, and clearly, but not all of them were reporting really low rates. On a national level, I think it's really the Netherlands that seems to be one of those leading countries, leading outliers.
And in terms of, I suppose, why non-revenue water matters, presumably one of the major issues is, as I think you just referenced there, climate change is a massive issue for everyone. And in very hot countries, I guess water resources are fairly scarce or restricted anyway. But even in temperate climates, like, I'm based in the UK, but we probably every summer almost now, one of the water companies or other has a hose pipe ban because there's not enough water to go around. So when water resources are under sort of increasing threat, should we say, non-revenue water doesn't necessarily look that good. Is that fair to say?
Yeah, I think that's certainly fair to say, and it's a real struggle with the utilities trying to adapt to climate change anyway. So, utilities that are located particularly in areas that are vulnerable to sea level rise are already starting to see saltwater intrusion come into aquifers, and they're having to, invest more in sort of expensive treatment upgrades. So if they're investing more to treat water and that's costing more, and then they're not able to ultimately charge for it, then that sort of becomes more of a compounding issue for utilities around the world. And really, I think, one of the interesting things we found from looking at countries' adaptation plans as they were submitting to the UN as part of the COP process, almost every single one mentions the need to invest in their water resources and the water infrastructure as part of their adaptation plans. So really, what we're finding is you can't really invest in adaptation without investing in water. And so it's really kind of a critical thing all around the world.
And I mean, is it fair to describe it as, I've come up with the phrase economically illiterate to treat water, which, as you say, can be very expensive, particularly, desalination plants cost a lot more than standard water treatment. But does it make no sense financially for companies to do all this treatment and then watch a certain amount of it, whatever figure they might quote, disappear before it even gets to the customer, whether or not that customer is then being charged the right amount for it?
Yeah, I think I definitely would not use your term economically illiterate. I think one of the starting points that we need to think about is that the financial materiality of the non-revenue water will really depend on the situation of the utility, both its cost of providing water service, the cost of that water supply in the first place, the cost of treatment, the cost of delivery, will really vary, as well as the financial capacity of the ratepayers to be able to pay for that water. And so this will be a much bigger issue for some utilities than for others in terms of the financial considerations. And it's perfectly plausible for a utility to have relatively high non-revenue water, 10, 15, 20, even 30%, and still be very highly rated. And we looked at the ratings of a bunch of the different US municipal water and sewer utilities that we rate. A lot of them are rated AAA, even with fairly high non-revenue water percentages, because they have strong asset management, they have strong financial management, and they have strong capacity to pay for this cost.
But in terms of non-revenue water as an issue for water providers, whether they're private companies or public municipalities, would you say that everyone realizes that it's something of a problem that they need to perhaps get more of a handle on? And in terms of getting a handle on it, it's not necessarily that easy, because there's leakage, you've obviously got a lot of buried assets that you have to try and work out when they need replacing, etc. leaking. And as you say, in the other things, whether someone might be stealing the water, or if you're giving free water, inverted commas, to etc. Just how, I suppose, does everyone say it's a problem to start with, and B, how easy is it therefore for them to understand how much of a problem it may or may not be?
Yeah, I think that's one of the reasons that we wrote this piece, is to really be able to kind of raise the profile and help expound the different kinds of sustainability as well as financial challenges that can be posed by non-revenue water. A lot of folks in the utility management space are very familiar with and have been working on leakage rates for a very long time, but other broader policy circles, as well as a lot of general ratepayers, it is very much a buried underground, oftentimes unseen issue.
I guess part of the problem, or one of the issues to do with infrastructure renewal, that different countries renew their assets at different rates. So the non-revenue water, certainly when it comes to leakage, can be more or less of an issue. Again, did the report uncover anything about that, or is any recommendations around that?
Yeah, so we looked at one of the sort of what we consider a leading indicator of this, which is the average age of pipes. And we looked at that in different regions around the world. And we were seeing that the average age of pipes in North America and Asia was declining, but in Europe, it seems to be going up. And so we're concerned there that then there could be sort of, a potential knock-on effect to increasing non-revenue water later down the line from leakages, if that's not adequately managed. And that, even though there's not a perfect correlation between sort of age of pipes and non-revenue water, we do see it as sort of symptomatic of whether or not there's been investments in improving and updating the infrastructure, which is obviously quite critical to maintaining its integrity and being able to deliver water to the end user. I would say, though, that in Europe, it seems like regulators are responding, at least in the EU. We know the EU are going to be setting leakage rate targets from 2028, and that utilities will have to have, and nations will have to have, a plan in place for how they're going to reduce leakages from 2030 onwards. So we're hoping that seems to lead to a new case for investment into infrastructure in Europe. But let's see.
Yeah, and there always used to be the term economic level of leakage. So you spend a certain amount on making the infrastructure fairly robust, but the law of diminishing returns, I guess, kicks in, and therefore spending millions of pounds on reducing leakage by 0.00 whatever percent doesn't make sense. Have you got any sense that might be slightly changing? Again, where Ben was saying earlier about climate change and water resources being more important, does that economic level of leakage, has that changed, if you like, over time?
As we mentioned before, the economics are really going to be utility specific, depending on their cost of providing service, as well as their customer base and the ability to increase rates to pay for additional investment. I think one of the other things that we tried to bring attention to, though, with this piece, is that beyond the economics, there are also a broad range of other stakeholder sustainability kinds of issues that can be affected or exacerbated by non-revenue water, including water withdrawals and those impacts on water stress, including the impacts on aquatic ecosystems associated with those greater withdrawals to compensate for the non-revenue water. It increases the challenge of providing safe water service to people who currently don't have it, which can also present an affordability challenge for the ratepayers or the customers, as well as the utility itself. And then finally, there are a lot of greenhouse gas emissions associated with treating all of this water that in many cases is being lost due to leakage or other causes of water loss, as we talked about what they are. It's actually quite a large greenhouse gas footprint. And as we transition to more expensive or more energy intensive forms of treatment, those greenhouse gas emissions will continue to rise.
So having sort of examined the state of non-revenue water, does the report, or did the report come up with any recommendations in terms of helping people address, and I'm thinking, I mean, everything from, I guess, if water companies or utilities, municipalities are more transparent over the problem, how they're dealing with it, they might get a bit more sympathy and therefore help from customers if they need that. But also there's a lot of technology that can tell you. So did the report, give people some idea of what they can do to improve the non-revenue water situation?
Well, of course, as a ratings agency, we don't offer advice. But we really hoped that this piece would help elevate and draw more attention to the conversation and to understanding the different facets of the non-revenue water issue. I think one thing that we do point out, though, is in the discussion of operational challenges, from our opinion, the companies or the utilities that have the strongest asset management practices generally will have lower rates of non-revenue water, said not zero, but lower, and they'll have a thorough understanding of the different factors that are at play. How much of that is leakage? How much of that is underbilling? How much of that is due to just piping very long distances, or the geography of the system can also elevate non-revenue water. It's outside management's control. But when management has a clear view on what are the different factors contributing to non-revenue water, what those percentages look like, and what they can do to control that level, then they can make smart asset management decisions about investments now and in the future to help make sure that they're maintaining the system well as controlling the financial and other sustainability impacts of the non-revenue water in the system.
Okay, and in terms of being, on top of that asset management, as you said, did the report uncover any particular countries or leaders when it came to where they are? And I'm also interested, was there a direct correlation between them and how climate, sort of water stressed they might be, or is it not as simple to say, right, we're really hot, we've got very limited resources, therefore we're going to take this issue seriously, as opposed to someone who says, in simple terms, it rains here every day, we don't have a problem with water, so we're not too bothered about non-revenue? Just any thoughts on that?
Yeah, sure. So I mean, a lot of it comes down to the local regulatory environment in different countries. And, in parts of Europe, we have this sort of cost recovery compensation for utilities. That's the system we have in England and Wales, for instance. And there, you get a clear visibility into, utilities have a clear visibility into how they're going to be able to compensate for their investments. And that's ultimately sort of easier, I would say, from a global perspective in managing this issue. Although that said, a lot of countries, particularly in the developing world, are struggling with the ability to raise rates for water. Water, we know, is chronically undervalued as a global issue, but still, nonetheless, that happens to be a priority of many governments around the world, is tackling leakages and non-revenue water first. So you see that through the work that they're doing with the development banks, You see through the introduction of different sort of kind of priorities for the government as laid out in their water investment plans, in the budgets of governments and local governments, as well as, there's some unusual cases where we've seen that the development banks have helped the utilities partner with the private sectors to compensate subcontractors to manage non-revenue water, and have part of that compensation for those subcontractors tied to the outcomes on terms of non-revenue water. So there's different models being applied everywhere around the world, and it's to do with how water is financed. It's not always raising debt on the debt capital markets directly as a utility. Oftentimes they have to go through their government budgets.
Okay, and I must ask, based in the UK, and I know the UK water industry is always getting, shall we say, in the headlines normally for the wrong reason, sadly. So in terms of how it compares in the report, I don't know if you did any direct comparisons or just anecdotally how you think that the UK water industry is dealing with this problem, and I guess overall, but also compare it, I guess, more like for like with other European countries, maybe the United States, where they have a similar, shall we say, mature water infrastructure model. Just any thoughts you can share as to whether we should give ourselves a pat on the back or say there's more work to be done?
So the UK is hovering around about 20% in terms of non-revenue water, and comparatively from the whole data set on a global picture, that's not too bad. But if we look at sort of the closest peers, there's still some way, I guess, to go to reaching that 5% that the Netherlands show off. So there's still a gap, but really overall, I think one of the correlations that we found is that actually non-revenue water and income levels of countries is completely uncorrelated. So it doesn't seem to be a clear sort of link between sort of wealth of a nation and its non-revenue water at a national level. So basically it's a global problem, but I would say in a nutshell, the UK is doing okay.
Fair enough. And perhaps in finishing up, it'd be good to understand in terms of sort of non-revenue, if you combine non-revenue water and, as we mentioned a few times, climate change, do you anticipate this? I don't know if you asked any sort of future looking questions or if you're going to repeat the exercise, but how do you anticipate attitudes to non-revenue water potentially changing as, I say, we're going to get, I don't know, wetter winters, warmer summers, certainly in the Europe, but other parts of the world, I guess they'll just get hotter and hotter. So any thoughts as to how attitudes to non-revenue water are already changing or certainly might change in the future?
I think as water becomes a more valuable or a harder to come by resource, then naturally opinions and thought processes around non-revenue water are likely to change as well. I think when we look at the examples of places that have really performed well in terms of non-revenue water Beth has mentioned the Netherlands. Las Vegas has a non-revenue water percentage or a lost water percentage of about 5%. Where water is really treated as a valuable and scarce and precious commodity, and they charge for it fully, and they really make the investments to make sure that they're protecting that resource, then we've seen that non-revenue water can be reduced. It's never going to get to zero, but it can definitely be reduced. And I think as challenges around water are exacerbated by climate change, potentially we'll see that opinion changing in other places as well.
And I think the only thing I'd add, if I may, is this year was the first year that the United Nations met as part of their General Assembly in New York earlier in March for the first time to discuss water as an issue in over 40 years. So that's significant. And I really think that there's more of a call to action around water sort of spreading through the sustainable finance space, and in particular with sort of investors that are focused on impacts as well. we're really hoping that non-revenue water indicator is useful as an impact measurement for utilities that are seeking to tap into the sustainable finance markets.
And I just finally, in terms of how or when attitudes might change, do you think it will only happen for countries when there's a bit of a shock to this? I say in the UK, we seem to be used to the fact that somebody might announce a hosepipe ban, but fundamentally, the taps still run. We don't really get much restriction. Therefore, we potentially aren't too worried about non-revenue water. But if 1 year we had a massive ban for 4 months, then we all might get a bit sort of like, well, what's going on? All this water's not getting, it's just being out of the pipe. Just any thoughts as to what it will take to make that change for everyone to take the issue more seriously? Or, as you say, if the UN's talking about it, does that automatically just filter down to government and it gets higher up the agenda?
Yeah, I think it does get higher up on the agenda from sort of these top-down pushes, but it is also the bottom-up, right? As you say, if people start to notice more and more that their water use is being cut and more frequently cut, then they start to pay attention about what their provider can do to mediate that situation and prevent it from happening in the future. And I think then it's all this discussion around how they're paying, what they're paying for, and what service they're receiving. And Erin, is there anything you'd add?
No, I was just going to say, so often non-revenue water leakage, illicit taps, all of these things are outside of the public eye. I think the more we see these, what used to be low frequency, high impact events like limitations on water service, obviously that will help draw more public attention. If we just wait for there to be more major main breaks, those are also very infrequent. That said, when they occur, they do tend to attract a lot of attention and raise a lot of questions.
Okay, and just curiosity, are you planning to repeat the exercise in, 12 months, 24 months, just to see any changes, or what's the plan?
Well, I think we can see from like the S&P Global data that we're collecting, we can track that year on year, particularly on the listed water utilities side. And with non-revenue water rates in the US, utilities that we rate, Erin, they track that right every year. So it is something that we're looking at. Repeat reports, possibly.
I think one other thing to keep in mind, though, is that non-revenue water is very much a lagging indicator. Leakage rates depend on the age of the infrastructure, the age of the meters, the age of the pipe or age of the pipes, how you're managing the system. There can definitely be some quick wins. And a study that Wyatt did for the World Bank found that I believe it was 16 of 27 countries, they could do significant non-revenue water reduction projects with a payback period of less than 5 years. 7 more countries out of that 27 had a potential payback period between 5 and 10 years. That said, once you get past those quick wins, there are so many different factors that addressing non-revenue water is really more of a multi-year, potentially a multi-decade process. So we wouldn't expect to see these rates change tremendously quickly once those quick wins have been kind of completed.
Okay, well, I'll certainly watch this space with interest, but for now, at least, Beth and Erin, thank you very much for sharing your time and thoughts. Really appreciate it. Thank you.